Welcome to our Street View episode for September 2019. The kids are back to school this week, interest rates are on the move, maybe, and the Toronto real estate market is performing very, very well. So come on, let's jump right into the details. So it's that time of year again for our annual Thanksgiving Pop By Pick Up a Pie Party. This is our client appreciation event that we host right here in our backyard and our house in East Toronto. And I've been sampling the pies. You can see this one's about half gone now because I have to make sure that these pies are okay to share with all of you. So for any of you that are current or past clients of Madeline's and myself, we are going to be sending out your invite directly to you with that little check your favorite flavor, whether it be apple, blueberry, strawberry rhubarb, or the classic pumpkin. And I think Madeline's actually got us a couple extra flavors to choose from this year, so everybody can have the pie they love in time for the Thanksgiving weekend. So mark your calendars for Thursday, October the 10th, 5 p.m. till whenever. You just pop by our place, pick up your pie, and we'll be sure to get to say hello, connect, and share our appreciation with this wonderful community we get to serve. It's our way of saying thank you to all of you. And so we look forward to that one. It's going to be fun. So the Bank of Canada got together on Wednesday of this week to confirm that they are not making any adjustments to the key overnight lending rate, the Bank of Canada's benchmark rate, 1.75. And you're saying, hey, how does that apply to me? Well, if you have a variable rate mortgage, that means your mortgage payments are not going up and they're not going down. And if you have a variable rate tied to a line of credit, that also means that your interest costs there are not going up or not going down. It's holding steady. Now, much of the market and the global economy, other central banks have been lowering interest rates. As a matter of fact, in the middle of summer, you'll recall the Fed, south of the border, did lower interest rates a quarter point. And that's because of the U.S.-China trade conflict has escalated, world trade has contracted, and business investment has weakened. And so what does that mean? In Canada, our economy is actually operating very close to its potential, and the inflation goal of 2% is on target. So Canada is not necessarily seeing the impact of some of these trade wars yet. So the Bank of Canada is saying, until we do see that information, those indicators, we're not going to make any changes. What's also interesting is that we're going into a federal election cycle, and why change interest rates right before you go into a federal election? That's an interesting question. And the next Bank of Canada meeting for them to discuss these interest rates is end of October, right around election time. Then they'll be meeting again in December, and we anticipate in December there will be a shift, because I think a lot of the economic results will be better known, third quarter results, and if these trade wars continue throughout the fall, then we'll see some weakening economic numbers. So how does that translate back to real estate? That's a very good question, and I think there's some really great details to share in our real estate update. I always like to put some context into what we're sharing about the real estate market, and it's always the supply-demand dynamic. And so supply we look at in terms of new listings. And so for the month of August, the number of new listings was down 3%. There were only 12,000 new listings for the given month, which is a little bit lower than expected. And you know how this colored chart works. If we come across from the left all the way over to the month of August, we can see the orange bar represents 2019, and it's just a shade lower than the preceding year of 2018. But you can see that seasonality curve where it comes off the spring and the number of new listings slows through the summer months, and it'll pick up again as we go through the fall. So that's just a micro difference, 3%. What's more interesting that this chart does not show is the number of overall active listings, meaning what is the pool of available listings throughout the Greater Toronto Area. And that's actually down to 17,800, which still sounds like a lot, but compared with last year at this time, it's down 11.2%. So this is an environment where we have fewer listings, and if there's enough demand, what will happen to price? Let's have a look. So the demand is represented by the number of sales. And for the month of August, they were up 13.4%. So that represents 7,700 transactions. So that's quite, double-digit growth year over year, which is continuing from the month of July, where we also saw double-digit growth year over year. And we can see that in the orange bar represented in both August and July. And so what does that look like on a year-to-date basis? Once again, we're always trying to provide, not just month by month, but also on a cumulative basis for the year. We're actually up 12.8%. So 2019 is a more active year. There are more transactions happening. And and that's easy to understand how the inventory or the number of listings in the market are actually shrinking. So when you have fewer listings and you have suitable demand, what happens to price? Well, let's have a look at that next. So the result is the market is up 3.6%. Average price of a home in the Greater Toronto Area is $792,611. And that is, once again, we look at these bars, these orange bars, as it's been tracking throughout the entire year. There's been this really consistent, moderate growth month after month after month. And the specifics of it are, that August was 3.6, but July was 3.2, June was 3% even, May was 3.6, and April was 1.9. So this is a very, once again, that idea that we keep talking about, that our overall annualized growth for the end of the year might fall in that range of 3 to 5%. And that's much more sustainable growth, given that inflation is 2%. So it's interesting, we're getting a little bit of market growth, and it continues to kind of make that steady march in that direction. But we can also see from this chart, those green bars that are shooting up, that's 2017. And we have not gotten back to those peak levels yet. Will we in 2020? It's hard to say. Probably not with this moderate growth of 3%, 3%, 3%. And unless interest rates change, then I think we're into this continued balanced market where there is demand, most certainly, and now we're seeing a constricted supply. Price growth will always be the net result. And so it's interesting to see how that continues to be our story. And now our composite chart, which breaks down not only the number of sales and the average price, it also breaks down what happened in the month of August and then what's happening as a change percentage year over year. And so we always kind of look for where are the top performers based on the property type and the location, because we can see how that right-hand column is broken down to average price, both in the 416 area code and the 905 area code, and then the total. So let's focus on the 416, and as we go down that column, we can see that detached homes at $1,246,000 represents a 0.3% year-over-year increase. So very flat, very moderate. And detached homes in the city of Toronto have been very flat year-over-year, and that's been a continuing story all year. What's next is semi-detached homes. We can see a semi is up to $956,000, or a 7.3% increase. And because it's below $1 million, and it's much easier to qualify for a mortgage below $1 million, given stress tests and the required percentage deposits and these sorts of things, it's where we're seeing a lot more value growth. And it'll probably continue as it pushes price right up to the $1 million mark, which is kind of interesting, but we'll see how that continues to evolve. And then we can see that condo apartment at the bottom there, $619,000 is the average price inside the 416, represents a 5.7% increase year over year. It's been trending much, much higher in recent months. It's always been the star performer every month that we get together and talk about it, but not so much this month. And it's interesting because I think condo pricing will start to plateau, because the jump from a condo apartment to whether it be a townhouse or a semi, when those numbers are fairly tight, people will say, I'll go this way versus that way. There is a little bit of that. I know it's hard to see it necessarily in the numbers, but yeah, it's some of the micro things that happen inside the market. And when we look at the 905, absolutely, the number one class of real estate that's growing rapidly is the condo apartment at 8.5%. We can see it in that column second from the right, at an average price of $478,000. And overall, the 905 is just seeing some steady, moderate growth as they have all year long. And the 905 really suffered from the 2017 correction, and it's been a much different market in the surrounding areas. And it's taken a lot of time for it to get stability, and it has had stability throughout the majority of this year. But I think as we continue to see this value growth inside the core of the city, it'll just push buyers out into that 905 area. And going into 2020, we'll probably see some stronger growth numbers for those of you that are in the surrounding 905. We're incredibly fortunate in the Toronto area to have real estate be one of the key wealth building assets that we hold. The overwhelming demand for new Canadians to want to live in the greater Toronto area and find a community where they can fit and find access to great paying jobs, great schools, healthcare, services, amenities, and probably some of the best weather that you can find throughout Canada. I think we've got a good share of it anyhow. The winters aren't quite as tough as they are in some parts of the country for sure. So those are the underpinnings that really feed real estate. It's the demand that people want to live here. The real estate market continues to be very, very solid and very balanced at this time. It's probably one of the most stable markets that we've partaked in my 14-year career, almost 14 years. It'll be at the end of the year. And I think that really provides optimism for what this city is becoming and what it will be in the future. And I think it's a wonderful investment and it's a great lifestyle to be a part of. So with that, I'm Matt Emerson of RE/MAX Hallmark, Emerson Group Realty. I'll look forward to speaking with you again next month. Bye for now.